Here we go, quick weekend video for Gdxj and Jnug. You can see here in the chart from last week, we held support in that 31 to 33 zone. We didn't get that bounce early in the week like I was expecting, but we did end up getting that at the end of the week. It seems that it was being held up because of the jobs report. So we had a good, strong daily candle on Friday. Also, a really strong weekly candle in the monthly held the 50-month moving average. So all time frames are looking good. Definitely a lot better than they were last week. The bears were getting a little too confident, a little too cocky. They gave a good amount, or not a good amount, but they gave about 15% back on Friday after that move. So that leaves us with a pretty good trading opportunity coming into next week. The resistance remains in that 32 zone. And then the upside target would remain this downtrend, this thick red line. And then you'll have resistance again at the 200-day moving average. And then also the 10. Hopefully on Monday we either gap up or we can move back above the 10-day moving average and start to get that to turn back up. And if we're in a sort of an ABCD pattern, first we're going to need to break through the downtrend, and then if we can get through the downtrend, there's going to be quite a bit of resistance. I'm guessing maybe we might move up a little bit into the Fed meeting, and then who knows, if the history is any indication, we'll start the next leg up after the Fed meeting, if they do or do not decide to raise interest rates. We hopefully will see a push through that previous high around 43, and then that would take us to a target of 48 to 52. So that's going to bring us back to the old highs if we can make it through on one push. That seems like a bit of a stretch, but it could be done. The money flow in the Gdxj is the lowest that I've ever seen it in a long time. So there's definitely a lot of people that got out of the trade. So if everyone gets back in it and you just trade it back until the money flow gets up to the upper band, we could see some pretty significant gains here. Again, that target remains in that 42-40 zone, so it'll be much like last week, probably a good 60-70% from here, and then we may get a small pullback and then off to the next leg of that run. But if Gdxj gets back up to 48, I'll post another video later today or tonight on that calculation with the leverage effect website and the trading charting tool. But that could be some pretty significant gains if we can hold the lows from last week and start to move higher in this sort of, if we continue this expanding wedge pattern. We'll have to drop this green line down a little bit and complete that wedge. So we're most likely either going to be stuck in this wedge until mid-April or maybe beginning of May before it breaks out. It's either going to break out up or it's going to break down, obviously, two ways. The way that the charts are setting up is favoring a bullish breakout, so we'll see. Definitely keep your eye on the action early in the week and at the Fed minutes. Watch for that 10-day to start curling back up. You can see here we had some divergence on the 7-period RSI that we were watching last week that was bottoming out here, and then we can see we broke this downtrend line. So we're going to want to see the RSI move back above the 50 and then head back up towards the 70. That's what we were watching last week. We didn't get it, but it did come towards the end of the week, got some bullish action. So hopefully we'll get some follow through next week, and we'll see that too. If this is a longer trend, bull trend, then we'll see it embedded in the upper 50 to 70 region, and we shouldn't really see it drop back down down to the 30 end. And the MACD also looks to be curling up here, which is also a good development. That's the last time was at the last turn, and then that trend lasted for about a month and a half. So it's a pretty solid buy signal when the MACD crosses up. So we're looking at a potential cross maybe this week, towards the middle end of this week, probably around the Fed minutes. So keep an eye on that MACD, keep an eye on the RSI, keep an eye on this wedge consolidation, the 200-day, lots of overhead resistance, so expect to see a lot of action in that area. And then if we do break out above, you may or may not want to buy that. I think buying, well, if you're going to play this trade, you're going to want to buy it probably sometime on Monday. Otherwise, if you're trying to buy the breakout of the 200, as you can see before, if you bought that breakout of the 200, you lost 50, 60, 70% from 12 all the way down to 5 in Jnug. So buying the breakouts is not really panning out these days. So the trade looks good on Monday to get in there and then hold for these other two targets. I'll post another video later on to show the percentage gains, and then JDUS would be, or I guess the negative, if you're not going to want, if Jnug breaks or Gdxj breaks down below last week's low, or it's looking weak, it can't get above the 10-day and then starts to fall back, breaks the 32, 33 zone, you're going to want to get out of Jnug, and until we can at least regain the 10. And yeah, so we'll see how that plays out. This is the weekend video, and we'll check back throughout the week and then next week to see how this played out. Thanks for watching, and be sure to like and subscribe. Thank you.